Welcome to the National Real Estate Cafe, where yes, my beard continues to grow for Movember.
All right, well, come here for your daily dose real estate market updates, and today we're going to go over one slide that has some great information, so pay attention.
Yeah, so let's take a look at this slide. It's got a lot of really good information. One of the things that I like is home sales. As you see, home sales grew pretty dramatically from the first quarter to the last quarter of the year, and now it's showing that it's pretty stable and projected to stay stable and then grow in the third and fourth quarter of next year again, Don.
So what that means to you is basically house appreciation. So let's go to housing starts now. This is basically new construction.
So this is where we've got to be careful, right? Because as we continue to see these grow, eventually you as a seller are going to have a builder competing in your marketplace. As of right now, there's still not a lot of inventory, so we can continue to absorb builder inventory at least until we get to 6 months inventory. And this time I think the builders are going to be a little more cautious. They're not going to get a little too crazy and overbuild.
Yeah, we see that the numbers are a lot lower than they were during the heyday. All right, and lastly on this chart is something that's really important. And Fannie Mae, actually it's funny, this is Fannie Mae report, and you're going to see how the interest rates are going to steadily increase between now and 2016. What's funny is that we've already seen a little bit of increase. I think it's funny, they changed their numbers.
Yeah.
Fannie Mae did have it going up to 4.5 or 4.6% throughout 2016. Now they lowered those projections.
This is the lowest projection we've seen in a really long time, but I think it's a more accurate projection. The thing is, the global climate is not letting rates climb. So it's not so much what's happening here in the States. It's not a conspiracy theory because the real estate market's going to fall apart if rates go up. It's really none of that. What it is there's just so much going on abroad that really nobody's paying any yield, so 3 and change percent looks really attractive to somebody buying a 30-year bond.
Now, remember, these are long-term interest rates. There is a very, very good chance that short-term interest rates will start to increase.
Right.
That's your credit cards, your car loans, and so forth.
Home equity lines
Home
of credit.
equity lines of credit.
Anything
yeah.
tied to prime is basically what you're looking at there. Now, maybe there's the chance that actually CDs and those kinds of things start paying a little more return on the short-term end of the yield too.
That makes sense. All right, so now you know the numbers and a good reason why you need to take action, because you hear all the time in the media loving to spin that we're going to have a housing crash again. But you can see that the numbers don't lie. We're going to be staying pretty steady for a while. So get in the market now before home prices go up and interest rates go up. You heard it right here on the National Real Estate Cafe with Don and Gino Fronte for your daily dose of real estate market updates.
So make sure to text NREC to the number 58885 to get that daily dose so you're always in the know.
All right, check us out at nrecafe.com.